Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update. I'm even going to call it the market wrap up. Market's not closed yet, but what I want to do in this video is just a very brief overview of the market and then stop talking about that for a little bit. Only because remember, the stock market is the broad market, the S&P 500, really all the stocks out there. But that's not where the money is to be made. That's not where the trading opportunities are. We got a little excitement recently with that, the bearish engulfing candles and the biggest pullback that we've had now for weeks. But again, we're kind of chopping around. We're in that trading range. I don't expect any major fireworks until I should say, of course we finally will, until we finally break out of that trading range. So same story as the previous update. We're kind of stair-stepping down. We do have the makings of a near-term downtrend within a larger sideways trend. These are the futures on the S&P 500 ES. And then NQ probably more significant right now at this moment. What stands out to me is we're rallying back to that 9-11-11 area. It's 9-11-11-50, call it 9-11-12 or 9-11-12, whatever you want to call it. And we still have, again, the makings of a early stage downtrend, and we'll see. So ideally, we don't always get what we want, but for the bearish scenario, ideally NQ needs to stay below that previous reaction high right there, turn down soon. I suspect we'll get a dump into the close, but if they ramp it into the close and we go up and really we take out that previous high, it's Friday, as I said earlier. Don't put too much into what happens in the final half hour or so, especially the final 15 minutes of trading, but that's where we're at. So that's why I'm making this the end of day video. It doesn't matter to me unless the market were to move, 3% or more, and that's not going to happen. Not today. It would take a big headline. Nothing's going to change in the technicals, even if we've rallied a little bit above that level. And again, more importantly, really is the S&P 500, because that's more of the stock market, not just a FANG index, FAAMG, like the Nasdaq 100 is. So there's your levels. There's your previous reaction high, and even if we popped it. You can look at it this way too regarding the downtrend. I don't want to put too much of a weighting in there, but you'd have a major reaction high there, one there, and maybe we go a little bit higher here like this, and then turn down on Monday. That's not a line tool, but you see what I'm saying. And we'd still have then a reaction high there. So there's a lot we could do here as long as we don't take out this high and this high. We could keep a near-term downtrend intact, but again, big picture is this: you're going to get ground to pieces if that's all you're trading. So let's look at some of the ideas where to make money. I'm going to start out with one of the trade ideas and some others in that sector that probably have the most profit potential. They are the most risky. I at times over the years, I was very, very actively posting cannabis stocks, marijuana stocks, 2015, 2016, before most were even picking up on them, before we even had an ETF out there. Almost all bullish and long, with some times to get out, pull back, some few short trades. And then when the sector peaked out, a year or so ago, I said I think that's it. I think it's way overdone, way overhyped. And I listed some fundamental reasons why that we probably saw a major top, and it kind of stood aside since then. But I did, let me find it here. I did post a couple updates starting yesterday in the trading room. This one, member Duffy 12. Let me find the original one. Go back here. Actually asked about Tilray, or no, it was which one was it? Not Tilray. It was one of the other big pots. CGC. Here it is. And so my reply is, look, I looked at the chart of CGC. It wasn't clearly bullish or bearish to me, so I mentioned I didn't have a strong opinion, so I'm not going to give you one that has much value. However, what stood out to me when I took a look, I pulled up my watch list, and I had taken my eyes off these for a while. ACB, Aurora Cannabis. This has the distinction of being the first official penny stock trade, bulletin board or over-the-counter stock, and cannabis stock trade official on the site. We started buying this at 55 cents. The stock went up, thousands of percent since then, and that was a long-term trade. I was very bullish on it fundamentally and technically. It used to be ACBFF back then because it wasn't even on one of the major exchanges at that time, and so long story short is I said, look, okay, I don't have a strong opinion on CGC right now, but I do, the chart of B is very constructive, starting to look constructive. Nice big positive divergence. Again, this is yesterday's chart. That candle right there went on yesterday to print a bullish engulfing candle. Remember, I just talked about the bearish engulfing on the indexes weekly recently. We had a bullish engulfing. Here, I'll get to the updated chart. So, and what I said is, look, here's the thing. ACB reported. I said they were scheduled to report. Was last night. So I said, take a position, it's going to be aggressive. Anytime you take a stock right in front of earnings, especially a low priced cannabis stock like that, you're running a high risk. The stock can either gap for or against your position. With that being said, the gap went the way that the charts indicated. This is something I've talked about many times over the years. I said, when it comes to earnings, in a vacuum, going long or stock ahead of earnings is a gamble. It is a crapshoot because stock can go either way. After earnings, it can go down or up. However, with the exception when the charts are clearly bullish or clearly bearish, the technical posture, not always, but much more often than not, that's the way the stock will go. I've talked about, and so you could see we had this bullish falling wedge yesterday, the positive divergence, and I posted this follow-up chart today. This is it. Here, let's pull the live chart. That was earlier in the trading room, and I'm going to show you some other stocks in the sector because ACB, Aurora Cannabis, is up now 71% on the day. Wish I took it. Kind of looked at it, followed up earlier today. It was right here. It popped up. You almost had to be in it before the earnings. Yesterday's bullish engulfing has now been confirmed. So where I'm going with this, look, as much as the stock is up today, this is bullish for the sector. This is one of the leading stocks. This is a clear, unmistakable breakout. It's everything. Hit the pause button there by mistake. All the boxes being checked. Bullish engulfing candle followed through with another green candle. A breakout above the bullish falling wedge pattern. This downtrend line right here. There's your downtrend line. Forms a bullish falling wedge, and it's impulsive. We went up this morning when I followed up. We were we had a brief hit and a brief pullback off that 952 level, and then we powered through it. So now we put that one in the rearview mirror, which opens the door for this next target up here, 1327. Would I chase it now? Probably not. On a pullback to 952, that would be objective. But what I want to show you is some other trade ideas in that sector. I'm just rifling through. I have a watch list of some of the top holdings in MJ. Okay, so here's one that looks good. Oh, my disclaimer on the on CGC yesterday, although I didn't have a strong opinion, I'll get to that when I said, look, they report, I'm going from memory, I think it was June 14th maybe. It's coming up soon, so you have that. However, what I said is, and what I'm saying now is that ACB may help set the tone for the sector as a whole. These guys are beat down. This is where, back here, is where I started making a case for a very significant top, saying these stocks are overhyped. The people, the street, everybody's just being ridiculous with their valuation expectations, the growth expectations for cannabis. One of the reasons I said, look, they're going to tax the hell out of the industry. That's why they made it legal, figuring it's going to reap in huge profits for the the governments that are letting this go, like Canada and the states. But guess what? It's still a weed. You can grow. You can order one of those hydroponic kits on Amazon, or just the dealers are still going to undercut. You can only tax something so much, and if it's easy to conceal, it's not like liquor. Back in the old days, you're not going to carry around, big bottles of bootleg gin and all that to avoid the liquor taxes. But on this kind of stuff, it's easy. So I think there's going to be a floor. Only so much you can tax cannabis, and that's what I was trying to say, is that the profit potential, I think, was overhyped on a lot of these companies, because it'll still find a black market until it reaches a point where these guys are selling it not much more than what the the drug dealer at the end of the street, or so-called, is going to sell it. Anyways, I'm digressing here. Let's get back to the charts. Bullish. You have these bullish falling wedges, breakout. Sometimes look at these cannabis stocks, you almost have to get in front of it. You can see we had a bullish falling wedge and a gap up. Boom. That might have been an earnings gap too. And it was a great move, but again, if you weren't positioned pre-breakout, there was some follow-up and went up about the same amount, 72%. And here we are. I have not scrubbed earnings for these, but it's just technical analysis. The charts are aligning right now, or pointing for more upside in this sector. And so OGI, the most objective entry is a break above. You have some price resistance. Let me lower that line right here to about right there. Turn on the level. It's about buck 51. That's price resistance, and it should intersect with that downtrend line, and so that's what that one needs to do. Again, you want to check to see when they report. Charts indicate, whether the initial reaction is down or not, that it will probably go up here, especially if there's some more follow through in the sector. They are in a downtrend, a bear market. You can see these moving averages rolling over, pointing down right now, but that's it. But again, how much of the 87% drop off the highs, the stock has lost almost 90% of its value, how much of that's been priced in already? There's a long-term support level it took out. If it can regain that, and that's 151 bullish. So again, that's just one. I'll go through some of the others here. HEXO, the chart's not as clear to me. Again, it's birds of a feather flock together type thing I'm talking about here. When the cannabis stocks move, this isn't mere coincidence that chart that we were just looking at on the previous one looks just like this one, and so forth. These guys tend to move together. They're all in the same sector. People are either buying the pot stocks or they're selling them. And so we'll see if there's some more follow through. Maybe ACB will be a one-day wonder, but again, the chart is pretty constructive heading into that, and now with today's breakout, even so, a little bit more. CRON needs to take out this downtrend line. We don't have the divergence, but it doesn't matter. You don't have to have divergence. Some potential levels. I haven't marked up all these charts in a while, guys, so a couple of them I did take a look at. Tilray, TLRY, another crowd favorite. Little symmetrical triangle pattern, had a little breakdown to the downside, which so far proved to be a false breakdown or whipsaw signal, aka bear trap. It's trying to get back up. If it can get up in there, and I took this trend line I had here, I had a price channel before with a breakout right here. Doesn't look like much, but these guys are, the price scaling we're looking at is huge. That was a 35% rally right there after that breakout, but these guys have fallen on this scale here, and I use log scaling. It paints a much more accurate picture. All my long-term charts, daily charts are log. If you are not using log scaling, you are looking at a distorted technical picture. Log scaling will put the price moves equally based on percentage moves. What does that mean? Well, okay, if a stock is $100 a share, like it was up here, and it moves $1, that's only a 1% move in the stock. And if the stock is down here to $10 and it moves $1, that's a 10% move, 10% gain or loss. Log scaling will set that all equal. So if you're not using log scaling, you're using arithmetic or linear scaling, it's going to show those moves as being equal, the $1 move as being equal. And that's, again, painting a very distorted technical picture, because a $1 move on a $100 stock is not nearly the same as a $1 move on a $10 stock. So by using log scaling, you can replicate these charts, and you can see from Tilray, you have a larger downtrend line right here, this one, and forming kind of this price channel. I could probably even extend that out longer. Yeah, the stock worked its way down within this price channel, fell below the channel here. Now it's consolidating in this symmetrical triangle just below. So if it pops into the channel, odds favor it'll probably run up and back to the top of that channel. What would that mean in percentage terms? Well, depending if and when it does, when it gets there, about 82% or so. Again, check these for earnings, because they're the only ones I looked at. The only one was CGC, because that's what's, and ACB, because I like the chart. CGC, there it is. That's why I didn't have a big strong read on it. I don't see a very solid trend line. I could probably, again, update this chart, give you a trend line there. There would be a target, so we could say somewhere up here to the downtrend line, probably at another horizontal level right here. I see some reactions right about there, that previous reaction high. So somewhere in here would be an initial target, and that could be anywhere from a 20 to 28-30% gain. GWPH, a couple trend lines, it's already challenging right now. Not one of my favorite, and this might not be a pure play. That's a drug manufacturer. I don't think it's a pure play cannabis stock like ACB and CGC and Tilray and those. So at resistance, again, not one of my favorite. ACB, I already covered that one. MJ is the ETF. If you know, don't want to take, because believe me, these stocks have a tremendous amount of risk. Any stock that can go up 70% in a day, or whatever ACB is doing right now, can drop huge amounts too. It's just the nature of the beast. You're not going to see Apple or Amazon go up 70% in a day. Likewise, you're not going to see them fall 20 or 30% in a day. Individual ones you can. So how do you mitigate that risk? Well, number one, don't put any more into any one stock than you're willing to lose. You're probably not going to lose it all, but if you take individual cannabis stocks, be prepared that if things go the wrong way and there's a gap, some news event, you hold it into earnings that you're not aware of, and it gaps 20-30% down, you're okay with that. And to be okay with it, just don't put as much into a speculative, aggressive trade like that you would on SPY or Apple or something like that. And again, one other way to mitigate risk is by taking an ETF. ETF will hold a basket of everything I've just showed you. These are all components. And so you can see the impact of that big move in ACB. It's certainly helping lift MJ, but it's not, you know, it's diluted, if you will, by the other stocks in there that are not, they're up, but not up as much. And some are actually, well, I don't know, I think most of the cannabis stocks, everyone on my list is green, so I take that back. But it works in reverse too, in case you have one big gap down or one big stock gets hit hard. It's only one of many within this ETF. So this one right now is it's consolidating, bouncing between 1054 roughly and 1268. An upside break, it's a lot of pretty a lot of thin air here. And it could run all the way up. I should put a line right about there. That would be a target with a check in between, halfway up, somewhere around here, that level of consolidation. You had a little bear flag here. So those are potential targets, and also objective long entries on a pullback to that level. Now, if the stock market takes it on the chin, you know, and we get into some type of broad-based liquidation type sell-off like we had back leading into the March lows, that should provide a tailwind to this or just about anything with a ticker like it did back in February to March. With that being said, if the stock market continues to grind around, even if it grinds lower from where we're at, I have seen these guys run. They tend to march to their own drumbeat. Why is that? Well, most of these are not, they're not components, or at least the majority aren't, of the major index ETFs. So if SPY is moving down, that's going to put pressure on the 500 stocks within the S&P 500, but it's not going to necessarily put pressure here. And then sometimes you have people looking for opportunities elsewhere. So I just want to say that there's a pretty low correlation, if you will, with the cannabis stocks. Just because they are stocks, they don't tend to have that same correlation like the heavily indexed stocks do. Oh, and that was a downtrend line I just gave you there as well, right there, that could spark a rally. All right, that's it. A couple more. TGODF, the Green Organic Dutchman. Not the kind of divergence I like to see, but again, the important thing is birds of a feather flock together. So if you continue to see more upside, if the buyers continue to come into this sector, this one could break out. And I don't see a whole lot of resistance on this one all the way up here at about 49 cents. Be aware, the lower the price, especially when you're under $1 a share, higher risk. You know, I would be much more comfortable with putting a higher position, larger amount into ACB or CGC than I would into a stock like this. You know, risk and reward go hand in hand. Now the flip side is, you know, you have a higher risk potential for loss, but also a higher gain potential if it does pan out. It's about 150% if it hits that target right up there. My first target about 50 cents. CR, BP, Corbus Pharmaceuticals, not my favorite. HEXTO, that's just, these are the Toronto shares that trade on the TSX for you Canadians. You know, you can trade those same ones, and if it doesn't have the .to after, these are for the US exchanges. All right, that's it. That one already went bye-bye. Let's see, WeedTO, GI, I think I hit them all. I'm just cycling through my watch list. All right, couple more trade ideas. You know, gold and silver I've highlighted recently. Let's take a look at that. Okay, the last two 60-minute charts I posted on gold were on May 8th right here, and I had a couple scenarios. Gold was pulling back after putting in a small divergent high, bigger picture breaking out of a, a bigger picture being bullish, or more of a, yeah, well, I've been longer term bullish for ages now, but intermediate term picture more bullish with the breakout of the symmetrical triangle pattern, pulsive breakout. And then the very near term picture was bearish because we put a small divergent high, pulled back. We were testing that 1718 support. Although it's favoring that, I said, look, we've just put a divergent high. We could go down, and if it can't hold 1780, then your next objective long entry is right here on a back test of the trend line, and would take us up here to my next target at 1758. That was again May 8th. Next chart was right here on May 11th, a couple days later, and that's what happened. Boom, there's your objective entry. Pointed out the time, and that brings us up to today, where we are at, if I can find gold. That's it, 1759. Watch, rinse, repeat. There's your entry right there. There's your target hit, resistance. Good time to book profits on gold. If you're an active trader, or like I said, this was a possible entry for the next ride up. Long-term charts remain constructive on gold. So these are kind of active trader stuff where active traders can buy the breakout, maybe take profits when you see bearish developments forming divergences, or if you took the breakout, you could add it to here, average down on your position, and then right up here and take profits. What's that good for in just a few days here? About 4%. Nothing much, but if you're trading a contracted, even one contracted GC, that's thousands of dollars in your pocket. So worth it for an active trader or a longer term trader. But like I said, odds favor pull back here, and there it is. There's your little divergent high. So an active trader can even go long, reverse, cover your sell your longs and reverse to a short. If you use interactive brokers, what's nice about it is you can do that in one fell swoop. If you're long, let's say 3 contracts at GC, enter an order to sell 6 contracts at GC, hit the sell button, and it'll sell 6, which clears out your 3 long and puts you 3 short for one single commission instead of 2. I don't know if any other brokers do that, but that's a nice feature. So that's when I talk about reversing long to short, which is what I did, at the 1759 level. Okay, and on that same time, that also back on, this was the last one I posted, last chart I have saved, May 8th on silver, as gold was setting up for move. Let me zoom in a little here. I put out this level here, and instead back here we had a breakout here, and that silver was an objective long, and I figured that at this point in time I figured silver would probably outperform gold, and it did. So as anticipated, silver has outperformed yesterday's breakouts in both, meaning both gold and silver, with silver hitting and testing the 15,841 target resistance level. That was good for, I think a 6% run, with the next buy signal to come on a solid break above it. So again, that was May 8th. Let's take a look now. And there it is. We'll zoom in a little tighter. There's your breakout. It's pretty solid, impulsive. Seeing that we didn't just limp through. Impulsive means that strong green candle, multiple candles, and that's good for about a 7% move in SI, or 8% actually, right up here. So same story. Nice, tactical entry. Silver has, I'm going to add a line here. I had my next target up here, or next resistance is 1773 or so. Let me remove that trend line, and I'm going to add a level right here. You can see these reactions here. Reaction from above, reaction from below, reactions from above, reaction from below. So 1725, we're almost there now. So silver might have a little more upside, but with gold at resistance, yet again I put very decent odds, well above average, enough to reverse before it even happens. A breakdown there, a reversal, at least a reaction, a pullback off 1725 or so. Probably not worth holding out for the last few fractions of a penny on that, or you could be a trend trader and just trail up stops. But what I'd be looking at now is this trend line here. So you can try to get in front of it, short at here or up to that level with a stop not far below, or wait for a breakdown of the trend line, and that would be an objective re-entry or a level to cover a short on a pullback to 16, a little bit above. again, you want to always cover a little bit above support on a pullback in case the buyers step in early, just like you want to sell just a hair below resistance. If it happens to power on through 1726 or so, then you do still have that 1773-ish target there, resistance, which at that point we're going to be quite a bit overbought. We don't have the divergences like gold, but again, if gold pulls back for the aforementioned reasons, silver will probably follow. These guys tend to trade together as well. And then on a similar sort of related note, I kind of sometimes lump Bitcoin in with gold and silver because it tends to be, at many points in time, a flight to safety asset, an alternative to the US dollar, that kind of thing. Although, of course, other than that, there's really no relation to gold. And I gave you my thoughts. I'm still, Bitcoin itself, I'm still watching it here. I told you, I, favor the downside resolution that it fails to take out 19, or not 19, that's 988, 87-ish, pretty much. And we have this other reaction just above that I suspect will probably break down, but it hasn't done it yet. And I also highlighted a couple of the Bitcoin proxy trades, and those are actually breaking down in advance. So maybe they know something that Bitcoin itself doesn't. But my proxy trades my two main ones are Riot and Overstock. And yesterday I highlighted that we had hit what was the third target way back when we had this trade. We hit that one for about 30%, the second target before it turned, and had a resistance level that still, as I said, is still likely to come into play yesterday, and it did. So this one's down 10%. So you could have shorted it there yesterday. Quick 10% pullback. I think it'll come back a little more, at least down here. Now, Bitcoin breaks that trend line. Like I said yesterday, there's a lot more downside in Riot, I believe. So that's so far so good. But like I said, it's hard to get super bearish on these until you see which way Bitcoin breaks from that pattern there. And the other one was Overstock, OSTK, and I don't know where it went. Maybe I drew it with the blue marker. We had a uptrend line here. Sometimes these lines take a second to populate. Uptrend line on Overstock right there, and boom, there's your sell signal. Now it's again a little bit questionable because we don't have a confirming sell signal on Bitcoin, but this one will trade on its own sometimes, and you have both Riot and Overstock breaking down today. We're looking at most likely a close below that trend line. So my minimum target still remains at, was a potential third target way back here, 1490, and then 12-ish, and possibly all the way back here. I got to give you that target. The target when it was an official trade, it was hit back here, or maybe that was unofficial. I can't remember. 915. That level's right around $9 or so, give or take. Let me just tweak that line, make it a nice round number. Oh no, it's at 920. Why is that? Yeah, okay, there's two lines there. This one at 9 and the other one at 920. It's more of a support zone. So we'll call that 9. You want to use the upper line too if you were targeting that level. Let me make that clear. If I have two support levels in close proximity and I'm shorting down to it, I'm not going to hold out for $9 if I see support start to come in around 920. I'll cover shy of that, probably at 930 or so on that one, if it happens to even get there. First things first, plenty of work to be done on Bitcoin. Oh, not plenty. It doesn't need to go far to break down or to break out. And I'm going to now add a benefit of the doubt BOD trend line here. That means I'm taking putting that trend line on the lows. There's a candle here that I excluded because it was just a little whipsaw breakthrough. But now we have the bottom of this candle here. So we can look at that. And if that goes, 1490 goes, we're going to have the early makings of a downtrend in Overstock. And last but not least, what I'd like to point out today is SOX. SOX was recently an official trade, barely had our stop clipped, we closed slightly above that 240.70. I was already suspending the stop on the SPY trade enough that I didn't extend it out to the other ones. But as I said, same technical posture. Just want to point out it's not participating today. The Nasdaq's gone green, or the Nasdaq 100 is up about 0.5% on the Qs. Yet the semis are down 2.19, and still, the same very reason we shorted this before, that it's still intact. We had a divergent high here, a breakdown of the rising wedge, little kickback rally, and there we are now. Sort of like the SPY, the S&P 500, it's in this kind of choppy sideways range. unless we hit that first target. Again, it's no longer an official trade technically because it's been stopped out, but I know some of you might have gave it some room. So I still think it works its way down there. If it does and it breaks that, then we have broken the that recent trading range. I think it'll be, in other words, a pretty quick move down to the second and quite likely the third target if and when we break below that support level here, which is actually the target's at 215.20, but the support's about 213.95. We'll call it 214. That's it. Now, of course, if it breaks above, is that bullish on face value? But it's only going to extend the divergences that were previously in place. Let's say, draw something like this, take this divergence line, extend it out like this, extend that one out like that. And so this is part of being in a sideways trading range, and that's why I start out the video by saying, look, broad market's great. I'm doing frequent analysis on it, but it's not really where the opportunities are right now. Opportunities lie elsewhere. You can't squeeze water from a rock or blood from a stone. So if you're trying to make money in the market, and active trading's been pretty good lately. There's been a lot of levels here. I've been able to, in my active trading account, while my swing trading accounts, longer term accounts, are kind of just spinning their wheels in the last few weeks. Active trading's been pretty nice. With the market bouncing off these support and resistance levels, looking at these little 60-minute divergences. Divergent highs go short, divergent lows go long, divergent highs go short, back forth, wash, rinse, repeat. All right, let's wrap it up here. Again, this will be the closing market wrap video because there's just not a whole lot new to add when we're just chopping around like this. And so we'll pick it up next week. This has been Randy Finney with Right Side of the Chart. Have a great weekend.